there's three ways to get out of a reverse mortgage. One is to pass away, the youngest borrower. The other is to refinance out of it or to sell the home. All right. Now, what happens? Does this debt pass on to the sibling or the heirs or whoever is part of the estate?
The husband, the wife, anybody?
If let's say the husband passes away and the wife it can still stay in the property, no problem, and they'll work that out even more. As of May, they made it easier to work it out so she can live there and work something with the tax break maybe, or even homeowners insurance. As you get older in age too, the tax exemptions are great, which you guys have discussed. After 65 in Rhode Island, you get a little tax break, and especially if you're a veteran, you get a tax break.
You should get big tax breaks if you're elderly or a veteran.
Exactly. So that becomes less expensive, and now you're dealing with one income, so they can restructure it. You can even cash in. And put the house in deed in lieu of foreclosure and take the rest of the cash that's left in the equity if you want. They've come creative so you're safe and protected, where the nightmares of being way upside down and worrying about it. This is a non-recourse loan. So you're paying heavy mortgage insurance premium, that dreaded FHA mortgage insurance. They get a lot of that in a reverse mortgage. Because if you're upside down and it's time to, give up the house or cash in, and you're upside down, the mortgage insurance takes care of the difference. Yeah. So the nightmares of people are saying, "Oh no, this is passed on to my kids. They have to try to sell the home." There's options now where before maybe there wasn't. You're still the owner of the property. It's not just in the lender's name. That's a big question I get too. No, you're still. It's just like any other refinance. Yes, it's a little bit more involved, but you're still on the deed to your home until you either pass away or hand it over.
Yeah.
So as far as your heirs, no debt is sent to them.
That's good.
Upon your death, or if you decide to walk away at some point, nothing is passed on to them, and any proceeds can go to your heirs if they do sell the property within 6 months.
What happens? Okay, now what happens basically if they've exhausted the entire reverse?
You'll get a letter. Let's say the HUD keeps track of these. So the Housing and Urban Development, they keep track of these, and then whoever your servicer is at the point, if you're capped out, they feel, all right, you're capped out, you're at 100% of what it should be. HUD will take over the servicing. It'll still keep going up over the years, but they'll take over the servicing, and at that point, you basically won. You're living in your house for free, basically.
You won.
And then
you're 95 years old. You definitely won.
You're probably tax exempt at that point. And that's the thing too. If you're 62, that's the smallest amount you can get is 52.5%. If you're 90, you can get 75%. And it goes up every year. You can get a little bit more.
It's a no-brainer for the bank.
Yeah,
and as we were discussing as well in the commercial break, if somebody's putting down 40%, the bank is basically regurgitating your money back, and then they have this house that is appreciating in value, because we all know. Look, now I want you to think, and you, our listeners, I want you to think real quick. 30 years ago, how much did your home cost? Was it 50, 60, 90,000? What is it now? 300?
Exactly.
Right? So my grandfather bought a house $14,000 50 years ago. It's $300,000 now. Right. Talk about a return on investment. So these banks are smart, but there's a practical application for this. And some of our listeners, this may benefit.
Some of them, they won't. I mean,
some of them, they won't.
If you have more money than you're not worried about doing with, then maybe this isn't for you. Even if you have a good retirement plan, it's a way to supplement your income and not have to work anymore.
Yep.
You can take it in increments. On the adjustable rates, there's, I'll read them to you. There are 5 ways to take your money. There's how you can cash in if it's in a refinance. It's called the tenure. You can get equal payments all the way through until you finish up what you have on a monthly basis. There's a term way where it's an equal amount of payments for a fixed amount. And then there's a line of credit, unscheduled payment. You can take it as you need it for upgrades or anything you need. You don't have to take, on a refinance, you don't have to take all the money that is available to you. You can use it in the way of a line of credit. So, and then you can mix the two. There's 2 other terms where you can mix the tenure and term and line of credit. Again, all of this information is on FHA.gov or HUD.gov. For some, it worked out for everyone that I have dealt with so far. Well, I'll give you an example. If your house was worth $250,000 4 years ago, 5 years ago, and you ended up taking about $160,000 reverse mortgage, at this point you probably owe about $210,000. But now your house is worth $300,000, $325,000. So people are worried about, oh my God, am I going to be upside down on this house? It does work so far. It has been working in this time now.
Yes.
Of course, in 2008, might not have been a great idea to get a reverse mortgage. But still, the values are increasing statewide in Rhode Island and Mass. And
everywhere.
So for now, it might be something to look into, especially if you're nearing your retirement age and you talk to your financial advisor. If you don't have a financial advisor, we're going to go over the numbers in exhaustion so you really understand what you're getting yourself
Mary
into.
Breimer, too. I mean, I would definitely suggest they speak with Mary Breimer.
Hit her up. She is definitely where it comes into tax advantages, how to avoid the capital gains, buying a new house to downsize. All of that can be utilized on a reverse mortgage for your primary residence only. Oh, yeah, definitely. Ton of great information. I mean, there's just too much to talk about here. It's a very, very, very... what's the word I'm looking for? It's just there's a lot going on here. There's a lot of moving parts to get. A lot of facets. Yeah. A lot of facets. You want to make sure all of your facts are straight, okay? And again, it's not practical for every single person. However, the people that it can help, this helps out big.